Good morning, and happy 4th of July. Markets are quiet on the calendar today, but the headlines sure weren't. Chips, AI money, a Bitcoin pivot from strategy, and a stack of corporate news out of JPMorgan, Comcast, Disney, and Reddit. Let's get into it. We have to start with chips because that's where almost every thread of today's story runs through. The number that jumped out: AMD has actually beaten Nvidia on returns through the first half of 2026. That's notable given how much of the AI narrative has been built around Nvidia specifically, and now the question on the street is what the second half of the year holds for AMD investors, whether that outperformance has legs or whether it was a first-half quirk. Meanwhile, ARM is being framed by analysts as a strong buy, even after pulling back 35% from its peak levels. A 35% drawdown is not small, so that strong buy call is a real vote of confidence that the long-term story hasn't changed even if the stock has cooled off. Then there's Micron, which is honestly the wildest number in today's file. The stock has soared nearly 700% over the past year. When a stock moves like that, stock split chatter starts almost automatically, and that's exactly what's circulating around Micron right now. A split wouldn't change the fundamentals, but it tends to show up once a stock's price has run this far. And then there's Nvidia, which somehow touches nearly every other story today, whether or not it's actually the subject. Nvidia is backing a security firm called Verkada and bringing in a Microsoft veteran to lead sales there, which is a real, standalone story. But Nvidia's ticker also shows up attached to pieces about Apple, Netflix, Canopy Growth, dividend stock picks, Johnson & Johnson versus Eli Lilly, Procter & Gamble versus Colgate. It's become the reference point that financial writers reach for no matter what they're actually writing about. That tells you something about where the market's attention is anchored right now, even in stories that have nothing to do with semiconductors. Here's where the news and the tape actually line up in an interesting way. On the data side, Nvidia itself traded down about 1.4% today, but on very heavy volume, north of 142 million shares. Intel had a rougher day, down roughly 5.25%, also on elevated volume. Those are two of the most actively traded names out there today. So even as the headlines lean bullish on the broader chip story, ARM's a buy, Micron's up 700%, AMD's beating Nvidia. The actual trading in Nvidia and Intel today was to the downside on unusually heavy volume. That's a bit of a gap between the narrative and the tape, and it's worth watching whether that heavy volume selling in the two bellwethers is a one-day blip or the start of something broader. Let's move to the bigger AI infrastructure and big tech picture, because there's a lot here. The biggest single number in the file, OpenAI, is reportedly headed toward a $1 trillion IPO. And the framing from the street is that the biggest winner from that might not even be OpenAI shareholders. It could be Microsoft, given its stake and relationship with the company. That's a massive number to sit with. And if that IPO path holds, Microsoft is positioned as one of the primary beneficiaries without necessarily doing anything different itself. Apple's got two separate stories running today that are worth pairing together. One report says Apple is planning 5 new iPhones, including a $2,500 foldable, and pushing toward 10 million foldable units, a real bet that foldables are ready to be a mainstream Apple product line rather than a niche experiment. But the second Apple story is more cautious. Wall Street's reaction to Apple's 2027 hardware refresh has reportedly come with a warning attached. So you've got an ambitious product roadmap on one hand, and some real skepticism from analysts about how it plays out on the other. Meta's in the mix too. Its next AI bet apparently comes with, as it was put, one major catch for investors. No specifics on what exactly that catch is, but it's enough to flag that not every AI bet from the mega caps is being read as a clean win. And speaking of who likes what, Bill Ackman was out today reiterating that he continues to prefer Alphabet, Amazon, and Meta. Separately, he also explained why he still won't buy Tesla, despite the fact that he actually drives one personally. That's a fairly pointed statement, liking the car enough to drive it. but not liking the stock enough to own it, and it stands in contrast to his enthusiasm for the other three names. One more move in this bucket, Strategy announced what's being called a major shakeup to its Bitcoin plan. That story is tied together with Bitcoin itself, Nvidia, and the dollar index, which tells you the market is reading this less as an isolated corporate decision and more as a signal about risk appetite and dollar dynamics more broadly. Worth watching what Strategy actually does with its Bitcoin holdings from here. Now to corporate news outside the AI complex. JPMorgan Chase authorized a $50 billion buyback and raised its dividend, a serious show of confidence from the bank, even as the stock is already sitting near record highs. That's the kind of move that raises the obvious question of whether the good news is already priced in. Comcast had a mixed day in the headlines. There's a reported NFL Network blackout on one hand, and NBC Universal reportedly exploring a move into video games on the other. And in a separate but related piece, analysts are apparently turning bullish on Comcast after the stock has fallen 50%, another case of a big decline attracting contrarian buyers. Disney is facing an FCC review of its ABC licenses, tied to a probe connected to The View. That's a regulatory overhang worth watching given how large ABC's licenses are to Disney's broadcast business. And Reddit is reportedly looking at raising its AI data licensing fees while also rolling out new shopping ad tools, two different ways of trying to monetize the same user base, one through the AI companies that need Reddit's data, and one through advertisers. On the value and income side, Bank of America flagged Delta and United as entering what it called a rare airline sweet spot, worth noting given how cyclical and beaten up the airline group has historically been. And there was a steady stream of dividend-focused comparisons today too, Johnson & Johnson against Eli Lilly, Procter & Gamble against Colgate-Palmolive, plus broader dividend portfolio and dividend ETF comparisons for income-focused investors. Quickly, on the non-market news of the day, Ukraine denied a Moscow claim of seizing a strategic stronghold. Mali saw a new wave of coordinated rebel attacks. The U.S. marked its 250th anniversary today with President Trump front and center, and a judge rejected a Trump bid to delay a $5.8 million payment owed to E. Jean Carroll. Let's close with the internals because they tell a slightly different story than the headline flow. Across more than 10,600 symbols analyzed today, the signals skewed bearish, 34 bearish signals against just 16 bullish ones. But the specific names driving that skew are not the big names we've been talking about. The bearish flags, overbought territory, potential overextension, were concentrated in small, thinly traded tickers like BFLX, Cello, KTTA, PU, and RNWWW. The bullish strong momentum up signals were similarly concentrated in small caps, GDC, PAVs, ALIT, NU, and QNCX. The volatility today was almost entirely a micro-cap story. BCPC surged 598%. CLRO more than doubled. CWD jumped over 90%. On the losing side, TC fell nearly 39%, LDX dropped over 37%, and LI slid almost 36%. And the heaviest volume of the day was dominated by low-priced, volatile names, LIM, CWD, INLF, and CIRC, trading alongside the big, familiar volume leaders, Nvidia, American Airlines, AT&T, and Intel. So that's the 4th of July tape. Big AI money headlines up top, real selling in Nvidia and Intel underneath them, and a wave of speculative activity churning through the small caps. That's market news for today. Enjoy the holiday, and we'll be back with you next time markets are open.